Welcome everyone to our webinar on understanding employer obligations for payroll tax and superannuation. My name is Helen and I'm the practice leader in LegalVision's tax team. I'm joined today by my colleague Tom, who is a lawyer in our corporate and tax team. Before we begin, a couple of quick housekeeping items which you will see on the slide. You'll receive the recording and slides in your email, so no need to take notes. Please submit your questions in the chat box and we'll answer them at the end. Please complete the feedback survey after the webinar. Also, all attendees are eligible to receive a free consultation with us to discuss how we can help you with your contracts, or any of your legal needs. To request your free consultation, please provide us with the contact details in the survey that appears at the end of this webinar. On the agenda today, we'll be covering employer obligations in respect of superannuation and payroll tax. In particular, how your contractors are treated for superannuation purposes and your payroll tax obligations as an employer in respect of payments made to non-employees. At the end of the webinar, we'll be answering some of your questions. So please submit your questions throughout the webinar through the chat function and we'll answer them at the end. Okay, great. So now that the admin is all sorted, let's get into the webinar. Employer obligations from a tax perspective. Determining whether your worker is an employee or an independent contractor is critical to understanding what your obligations are as an employer or a principal to a contractor. For the purposes of this webinar, I'll be referring to the paying entity as the employer. If the worker is an employee, then the employer would have tax obligations such as withholding PAYG, superannuation contributions, payroll tax, and fringe benefit tax. If the individual is not classified correctly, so for example, if the employer classified its worker as a contractor when in fact they're actually an employee, then the employer may end up with severe penalties and back payments, which could potentially bankrupt a business. Today, we'll be focusing on whether a contractor is an employee for superannuation purposes and when payroll tax may need to be paid in respect of payments made to non-employee relationships, such as a contractor or labour hire arrangement. On the next slide, we'll be discussing employer superannuation obligations. Employers are required to make superannuation contributions into a complying superannuation fund for the benefit of their employees. If these superannuation contributions are not made by the due date, which I've copied and pasted here on the slide directly from the ATO website, then the employer could be subject to superannuation guarantee charges of up to 200% of the superannuation amount, plus additional penalties and interest. This could be a significant financial consequence for a small business. Paying superannuation is generally pretty straightforward in an employment relationship. However, it can become quite complicated as to whether you need to pay superannuation contributions if engaging a contractor. On the following slide, I will touch on who is an employee for superannuation purposes. So who is an employee for superannuation purposes? Section 12 of the Superannuation Guarantee Act provides that an employee takes its ordinary meaning. The definition also includes an extended meaning in accordance with the legislation. The reason why the term employee is complicated is because the term is not defined under the legislation. The legislation also does not provide guidance as to what the ordinary meaning of an employee means. The consequences of this lack of definition and guidance means that even if a worker is engaged as a contractor, they could be captured under the ordinary meaning of an employee. It is not enough to call someone a contractor or have a contract agreement in place if the arrangement is actually that of an employee under common law. Further, even if an individual does not fall into the ordinary meaning of an employee, they may still get captured under the expanded meaning of an employee under Section 12 of the Superannuation Guarantee Administration Act. On the next slide, I will touch briefly on the ordinary meaning of an employee. Now, I wanted to touch briefly on when an individual is considered to be an employee under the ordinary meaning as a law in relation to who is an employee compared to who is actually an independent contractor has been an area of confusion for many business owners and has been the subject of many court cases. Such uncertainty imposes a significant compliance burden on small businesses. The ATO has provided some guidance in a ruling called Superannuation Guarantee Ruling 2005/1 on the factors that the ATO looks to when determining whether an individual is an employee or a contractor for superannuation. These factors are commonly known as the multifactorial test, which looks to the totality of the relationship, based on the facts and circumstances that surround the relationship between the employer and the contractor in determining the classification of a worker. I have listed some of the factors considered under the multi-factor test on the next slide. Indices here are factors that the courts have considered to be key indicators as to whether an individual is an employee or a contractor at common law. I won't be going through them today, but please have a look at them in your own time. For many years now, the multifactorial test has been regarded as the key test in determining whether a person is an employee or a contractor. However, recent cases reflect a significant shift towards placing the primary focus on the written contract as opposed to the multifactorial test, unless there is no agreement in place or the agreement is a sham contract. These recent cases mean that it's really important to put in place well-drafted contracts that accurately reflect the nature of the relationship. It's important that you seek guidance and advice from your advisors. The courts have made it clear that they will focus exclusively on the terms of the contract itself, rather than the facts and circumstances surrounding the relationship. It is important to note, however, that despite the recent cases, the ATO has yet to provide a definitive position on whether the ATO will be moving away from the multifactorial test. The ATO has, however, in light of recent cases, announced that public rulings which provide guidance on the meaning of the term employee are currently under review. Further to this, there is a draft practical compliance guidance 2022 D5, which was issued last December to assist taxpayers on their compliance risk. It is very likely the ATO will be changing its approach in light of recent cases, but we will see. Now that we've touched on the ordinary meaning of an employee, I did want to move on to the extended meaning of an employee in my next slide. The extended definition is only relevant if an individual does not fall into the ordinary meaning of an employee. I've listed here the various extended meanings under Section 12 of the Superannuation Guarantee Act. I won't be going through each of them today, but please have a look at them in your own time. The important ones to keep in mind are payments to directors, persons paid to perform or present any music, dance, entertainment, sport, or promotional activities, and persons paid in relation to the making of any film, television, or radio broadcasting. The extended meaning I did want to touch on today is under Section 12, sub 3 of the Superannuation Guarantees Act, which is on my next slide. Section 12.3 provides that if a person works under a contract that is wholly or principally for the labour of the person is an employee of the other party of the contract. The ATO has provided some guidance in the ruling I mentioned earlier in relation to this extended meaning. Basically, an individual would fall under a contract wholly or principally for their labour if the relevant individual is remunerated wholly or principally for their personal labour and skills. Secondly, if they perform the contractual work personally, for example, there is no right to delegate the work. And thirdly, if they're not paid to achieve a result. Having one of these factors does not mean that the individual automatically falls into the extended meaning. It is a matter of looking at the facts and circumstances of the relationship. For example, if an individual is engaged to achieve a result and there is a right to delegate in the agreement, even if that delegation requires written consent by the employer, then it's arguably that this individual falls outside of the extended meaning, even if they are paid wholly for their personal labour and skills, which means there's no requirement to pay superannuation in respect of the individual. Unfortunately, the distinction of whether an individual is an employee or contractor is complex, and getting it wrong can have significant economic consequences for an employer or a small business. We recommend that every business should review all of their contractor agreements and revise any structures as needed. Advice should be sought when engaging contractors to determine whether they fall into the ordinary meaning of an employee or into one of the extended meanings under the Superannuation Guarantees Act. I've listed here some practical tips. Making sure based on recent cases, it's really important that you're making sure your agreements accurately reflect the arrangement between you and your contractor. You should also consider whether the agreement can include the right to subcontract the work, delegating the work, even if it requires written consent by the employer. Setting out clearly what you're paying the contractor for and whether you can pay them on completion of the project, so a results-based agreement. And if you're not sure whether the agreement falls into the extended definition or not, then you should be seeking advice from your advisors. Now, I think that's enough about superannuation today. I'll pass you across to Tom, who will go into employers' payroll tax obligations. Thanks, Tom.
Great, thanks, Helen. So the first question when considering an employer's payroll tax obligations is first and foremost, what is payroll tax? So payroll tax is a state and territory-based tax which is imposed on an employer when their total Australian wages paid to their employees is over the relevant state or territory threshold. It's important to note that each state and territory has a different payroll tax rate and also a different payroll tax threshold. So an employer will need to register for payroll tax in a state or territory when its total Australian wages is over that state or territory's threshold. A common trap that employers often fall into is only considering workers in a particular jurisdiction and whether the amounts paid to the workers in that jurisdiction is over that jurisdiction's threshold amount. An employer needs to look at all of its Australian wages and consider whether that amount is over the jurisdiction's threshold. Now, another common question is what are actually considered wages for payroll tax purposes? So wages are more than just wages or salaries paid to employees. Wages does include these things, but it also includes remuneration, commission, bonuses, or allowance paid or payable to an employee. Basically, any remuneration paid in exchange for services to a business can be captured by the definition of wages for payroll tax. And it's also important to remember that shares or options granted under an employee share scheme are considered wages for payroll tax purposes, meaning that the market value of those interests will need to be added into employers' wages on the relevant date. And broadly speaking, an employer can choose whether this relevant date is the date those interests have been granted to the employee or the date that the employee exercises them. So we've put each state and territory's payroll tax rates and thresholds on the screen. I won't go through them, but it's important to remember that these thresholds and rates are current as of today, but certain jurisdictions have announced in their relative budgets that there's been proposed changes for future financial years. So it's important to get advice that's based on the relevant financial year and how those thresholds might apply then. So there's some payroll tax key focus areas that we want to take you through today that can cause particular pain points for employers. So there are certain provisions in the payroll tax law that deem certain workers as employees and deem the payer of those employees as an employer. So a particular focus at the moment is engaging contractors. So payments to contractors can be considered wages for payroll tax purposes if the arrangement is considered a relevant contract. So there are certain exceptions to this, such as when the contract is primarily for the delivery of goods, where there's no services involved, or where the contractor works in the business for less than 90 days in a financial year. If a contractor falls within the relevant contract rules, the contractor will be deemed an employee, and the person paying that contract will be deemed an employer, and the amounts paid by the deemed employer to the deemed employee will be deemed as wages. And these payments will contribute to the employer's total wages in the relevant reporting period. Another key focus area at the moment is employment agency arrangements. So if you're in the business of procuring workers to provide services to your clients, such as a labour hire business, the employment agency provisions in the payroll tax legislation may apply to this arrangement. So in this case, the employment agency is deemed an employer, and the service provider who provides services to the employment agency's end client is deemed to be an employee of the employment agent. So this means that the employment agent will have to pay payroll tax on the amount paid to that worker, even though that worker is providing services to a client of the employment agency. Now, if it's an on-hire arrangement where one employment agency engages a second employment agency to procure a worker for a client of the first employment agent, both agencies may need to pay payroll tax on this arrangement unless a chain of on-hire declaration has been completed by the parties. But generally speaking, payroll tax will only be imposed on the employment agency with the closest relationship to the end client receiving services. And another key focus area is when an employer has workers in multiple states or territories. So when an employer's total Australian wages exceeds a state or territory's threshold and the employer has workers in that jurisdiction, the employer will need to register for and pay payroll tax in that jurisdiction. So in the case that the threshold of that state or territory is then apportioned between the thresholds in the other jurisdictions to reflect the total percentage of wages that are paid in that jurisdiction as compared to its total Australian wages. So where an employer will actually pay tax in respect of an employee's wages depends on where the employee performs their services in a given month. So in the case that the employee performs all of their services in a given month in one jurisdiction, then payroll tax will be payable there. However, there can be a bit of a pain point where an employee might provide services in multiple jurisdictions in a given month. So to this effect, each state and territory has adopted a uniform nexus test, which can be applied where a worker performs duties in multiple jurisdictions in a given month. And by applying that nexus test or getting your advisors to help you with that nexus test, you'll be able to determine where payroll tax may be payable on payments to those particular workers. So there's been some changes to the payroll tax landscape because of some recent cases which have changed how payroll tax has been looked at, especially in the medical practices space. So these cases have found that payments made to doctors by a medical practice can be captured by the relevant contract provisions, which is concerning for the medical practice industry, given that a lot of medical practices have been set up in the same or in very similar ways to how the practices have been set up that have been discussed in these particular cases. And so it's a bit up in the air at the moment about how the state and territory revenue officers will respond to these recent cases. So probably the most famous of these cases is the Thomas and Naz case, which the appeal was handed down very recently in March of this year. So this case has become pretty famous in the payroll tax space, and it concerned arrangements between a medical practice and doctors working there, where the practice was collecting the doctor's Medicare benefits on the doctor's behalf. The practice would then keep its cut and then pay the rest to the doctors. The key takeaways from this case was that the doctors were providing services to the medical practice and not just to their patients, because seeing patients was so inherent to the medical practice's business, and this meant that the relevant contract provisions applied to that arrangement. The court then also held that the payment of the Medicare benefits by the medical practice to the doctors were considered wages, and that it was irrelevant that this was money that was otherwise owed to the doctors by Medicare. So it was an interesting point that the nature and character of the payment wasn't relevant. It was just relevant that a payment was being made under a relevant contract. So the only state that has released anything about their proposed approach is Queensland. So they've published a public ruling setting out their proposed approach, and also have provided an amnesty which allows taxpayers to try and get their house in order given the lack of clarity in the law. So if you need any assistance with this, whether it's applying the public ruling to your particular circumstances or assistance in applying to get under the amnesty, please let us know in your complimentary consultation. So this is an issue, as I mentioned earlier, as a number of medical practices have historically been set up in this way. So if you're not sure about whether the relevant contract provisions apply, you should come and talk to us so that we can assist with getting your payroll tax affairs in order. So I just want to go through some practical tips. So when it comes to managing your payroll tax liability. So the first tip is making sure that the service agreement is drafted in the correct way, and it should be made really clear in this service agreement which entity is actually providing services to who. So is it the case that the contractor is actually providing services to the particular business, or such in the case of the doctor arrangement, is their services actually going the other way? So in the case of the doctor, the argument was that the medical practice was actually providing services to the doctor, being a license to occupy the space so that the doctor could run its own business. So if the argument is that there are no services being provided by the contractor to the business, then the service agreement should be clear that there's no control being exerted over the contractor and how it runs its business. There shouldn't be any restraints in the contract preventing it from providing similar services elsewhere. There shouldn't be any roster or leave requirements, that kind of thing. So another practical tip to consider is whether any of the exemptions to the relevant contract provisions apply. So one in particular is using a particular contractor for less than 90 days in a financial year. So if that's the case, the payments to that contractor would be exempt from payroll tax. And there are a number of other exemptions that we can provide advice on. So another practical tip is considering the flow of payments and how the money is actually being moved between the parties. So this is especially relevant where a party is acting as a payment agent, such as in the context of a marketplace, where potentially money is just being held on behalf of another party to eventually pass it on. So in the terms and conditions, it should be made really clear whose money this actually is. And this is relevant for payroll tax, but can also be relevant for other tax liabilities, such as income tax. And then finally, last practical tip on payroll tax is making sure that your marketing materials reflect what's actually going on. And if contractors are being used in the course of running your business, not advertising the services of those contractors as being part of your business. So this was considered in the Thomas and Naz case, because in that case, the doctors were listed on the Thomas and Naz website as being our doctors. So that's just something to keep in mind there. So unfortunately, the distinction of whether an individual is an employee or contractor can be complex. And as Helen mentioned, getting it wrong can have significant consequences for an employer. So we recommend that every business should review all of their contractor arrangements and revise the structures as needed. And advice should be sought when engaging contractors to determine whether, for payroll tax purposes, they might fall within the relevant contract provisions and whether any of the exemptions may apply to exempt those payments from payroll tax. So that concludes the main part of this webinar. You might find our Payroll Tax Essentials fact sheet useful. You can download it through the handout panel or by scanning the QR code on this slide. We also have an upcoming webinar that may be of interest to you, Protecting Your Business, Best Practice for Preventing Employee Competitors, on Thursday, the 3rd of August at 11 a.m. Australian Eastern Standard Time. You can register on our website. So we're going to answer your questions shortly, but while you submit them, we'll take a minute to tell you about our membership. LegalVision membership is a cost-effective alternative to have all of your business's usual legal needs covered. For a fixed monthly fee, you not only receive cost certainty, but all-inclusive benefits such as unlimited document review, which would include reviewing your commercial contracts, unlimited consultations, which means you can book as many meetings with us as you need to discuss your commercial contracts or for any of your business's usual legal needs. You can talk to any of our lawyers, including us in the tax team, but also franchising, corporate, employment, etc., depending on your business's needs. Your membership also offers unlimited trademark registrations, all for one very reasonable monthly fee, with options to purchase extra credits towards complex matters such as those discussed today and ongoing disputes, which are charged on an hourly rates basis. And now we'll answer some of your questions.
Thanks, Tom. We've had a few questions come through. Just looking at them now. So I've got a question here, and it's a few people have asked the same question about whether the obligations change if there are different legal entities being the employer. This doesn't change the obligations from a tax perspective, whether you're employing them as a sole trader or as a partnership or through a trust or a company. So it's important that you are checking that your tax obligations as an employer, whether you're in any type of legal structure. The other one that kind of relates to this question is also if a company is set up and the directors and shareholders are employed through that entity, whether they're obligated to pay themselves a minimum wage. It is an employment law question because the obligations for minimum wage is under the Fair Work Act. It's not really a tax obligation, but it's important that you are seeking employment advice. We do have an employment team here, so if you are wanting advice on minimum wages or how to set up your employment arrangements as a director, then please reach out to our employment team. I think they can go through those minimum wage requirements. I just had one other question here I wanted to cover was, are there any superannuation risk if I'm a director of a company? If, as I mentioned earlier, if there are superannuation is not paid, or there's late payments and the company does not pay, then there are significant penalties and interest. If the company does not pay those penalties and interest and those debts are outstanding, the ATO does have the power to issue director penalty notices, which is then a risk for the director personally. It's imposing those penalties and debts to the director.
We also had a question around what are the payroll tax obligations in relation to an ESOP program. So I did briefly cover this before, but just to reiterate, so the market value of the interests under the ESOPs or the options would be included as taxable wages for payroll tax purposes. But the employer has the option to choose what the relevant date for including those wages in its payroll tax amounts. So it can either choose the date of the grant, but it can also choose the date when the employee exercises them. And so it will come down to what the employer thinks is better from their payroll tax liability perspective and what might produce a lower payroll tax liability for them.
We had another question come through which says, where contractors are engaged on a retainer, what can you do to further distinguish the relationship? I'm assuming on a retainer means an ongoing basis. Whether that contractor is an employee or not is going to come down to the facts. We would, we'll look at the multifactorial test and determine, what the control is, what type of work is involved, whether they're being paid on a results basis, whether the work that they, set out in the retainer can be delegated to someone else, whether there's a restraint period. There are a number of factors that we would need to consider under that retainer relationship to distinguish whether they're an employee or a contractor. It would be really important to also look at whether you're paying that contractor principally for their skills and labour. If they're restricted from delegating the work and you are paying them on an hourly rate basis, then there's potentially a high risk that they could fall under the extended meaning of an employee for superannuation purposes. For payroll tax purposes, it's very likely that they'll fall into the relevant contract provision for payroll tax, and you may have to pay payroll tax in respect to the payments being made to that contractor, unless one of the exemptions apply. So definitely look at the one of the slides, I think where Tom had the exemptions listed, depending on which state you're in. If you're not sure, please reach out, log your details on the consultation and we can have a chat to you about your particular contractor.
There was a question about, do the contractor rules apply to contractors who are based overseas? And if so, how do they differ? So generally speaking, payments to overseas employees or contractors will depend on how long they're overseas for, but generally speaking, payments made to contractors based overseas wouldn't be captured in your payroll tax wages for that particular reporting period. In the case of employees, we would need to consider what the arrangement was in a little bit more detail and how long they've been overseas for, that kind of thing. So if you have employees that are overseas and you're concerned about payroll tax, then definitely get in touch.
Going off that one, there was another question about hiring employees from overseas and how that would work and what your obligations are from a PAYG and superannuation obligation. Generally speaking, if an employee is permanently overseas and they're exercising their work in their other country, then there is no obligation from a PAYG obligation. But it's very dependent on the facts. And for superannuation purposes as well, there is a distinguishment between whether the person is going to be in the country permanently or whether they're going to be working permanently outside of the country. There are also considerations as to if there was tax payable in Australia, whether there's also tax payable in the other country, and then we would need to look at the double tax treaty as well. One of the other questions talked about what happens if an employee is being employed in the other country while they're waiting for their visa to be approved in Australia, and whether they need to pay superannuation. It's a complicated question because it's going to depend on whether the employer is required to pay superannuation in the other country. And when they come over to Australia, once their visa is approved, whether a certificate of coverage needs to be applied for in the other country and then submitted to the ATO here, because there are bilateral social security agreements between various countries and Australia. So with these particular bespoke questions, I think it's important, if you're still wanting advice on it, to submit your details into the consultation and we can get in touch with you about your specific matters.
So there was a question about determining the ESOP fair market value, can we use the ATO safe harbour methods? So for payroll tax purposes, no, you can't use the safe harbour valuation methodology for payroll tax purposes and adding that into your payroll tax wages for that particular reporting period. So you'll need to consider what the fair market value of those are, which is a question really for a valuer. So definitely come and chat to us, and if needed, we can put you in touch with our partners who work in the valuation space. So we had another question for payroll tax around the employment agency and on hire, which was what happens if the agent closest to the client doesn't pay payroll tax because they're under the threshold for that particular jurisdiction. So in this case, assuming that the second agent in the chain of on hire arrangement was liable to pay payroll tax because they were over the threshold in that relevant jurisdiction, then that second agent would then have to pay the payroll tax for that particular arrangement. And then we just had another one on payroll tax as well, which was, so if we have a single employee who works remotely from Queensland, but the rest of our employees are in New South Wales, does that mean we'll have to register for and pay payroll tax in Queensland? So the answer to that is assuming that your total Australian wages are over the Queensland threshold, which at the moment is $1.3 million. It doesn't matter that the rest of your workforce aren't there, you will have to register for payroll tax in Queensland.
I just had another question on the superannuation front. What if we've engaged our contractors, but we don't have anything in writing? What are our risks? As I mentioned earlier, it's really important to ensure you have your arrangements in writing, as due to the recent court cases, the importance of having a written contract is paramount. The ATO has issued, as I mentioned, a practical compliance guidance. It is in draft and it's still waiting for submissions. I think the submissions have been completed, so it is being finalised, but essentially it is a practical compliance guidance which gives taxpayers guidance as to circumstances where the ATO are likely to put resources towards the arrangement. The guidance provides that if you meet certain factors, such as you've discussed with the other contractor and you've sought advice as to the arrangement and both parties understand their tax obligations, the contractor has agreed to its obligations in respect to paying superannuation and paying PAYG, then there is a low risk the ATO is going to put resources towards the arrangement. It still puts a lot of onus on the parties and also on the employer to seek legal advice. So whether this practical guidance is actually going to alleviate some of the burden that's put on small businesses is still up in the air. But we'll see, how the ATO actually implements and enforces this practical guidance.
Great, well, that's all the time we have for today. So after the webinar ends, a survey will pop up. We'd really appreciate it if you could complete the 30-second survey. Please include your contact details to receive a complimentary legal consultation to discuss how we can help you with your payroll tax and superannuation obligations. If we haven't had a chance to answer your questions today, please book in a complimentary legal consultation where we can discuss your question in more detail. Thank you so much for joining us today.
Thanks, everyone.